Wow, 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 wow. That's really all I can say. It has been one hell of a week in the markets. If you guys have been watching from the sidelines or you've been trading in the markets, you know that the volatility has really just been unparalleled. Something that we haven't experienced in all of 2015, and already in 1 week of 2016, we've seen some insane volatility. So, it's Saturday right now, and I want to just take some time to review and reflect, and I want to share what I think is just a little piece of wisdom, a little piece of advice on why you see volatility like this and how to not get caught up in the volatility and how to actually take advantage of this volatility. Because if you know how to trade these types of scenarios, they can be some of the most profitable times. But for a lot of people, it's frightening to trade in an environment like this. And the stuff that I'm going to share with you today and the knowledge that I'm going to bring to the table isn't anything groundbreaking. I'm not, I didn't invent some crazy system. I'm just taking it back to the basics, and I want to explain something that is really, really just, fundamental in my trading, and I think needs to be fundamental in everyone's trading. So what you're looking at right now is a 1 hour chart of the mini Dow Jones, which is the futures contract for the Dow Jones. And, I'm not a huge futures trader, but in the last couple of weeks when you have volatility like this, I've definitely been taking advantage of some different trades. So I've been swing trading a little bit, some of this, just, 1 to 2 days, nothing super long term. And I've been doing some intraday trades. But how am I pulling this off? How am I trading this instrument? And how am I not just getting completely, whipped around in this volatility? And it comes back down to one simple concept. I'm looking at support and resistance, right? Super, super simple, super, classic way of looking at things. This isn't anything new. But what you have to realize is that no matter what it is, a future contract, it's a stock, it's even, Forex, which I don't trade at all, but if it, it can be any vehicle. But instruments, whatever you want to define them as, they stop and reverse at certain points. It's not random. So let me break down this chart to you and let me show you how I've been trading it, because what creates an environment like this that we've experienced the last few weeks is emotion, right? You just get pure emotion, and that's why you get this volatility, because people are really emotional. They're acting in an irrational state, and that's why you get this madness. So how can I be as rational as possible in a scenario like this and take advantage of that volatility? Well, it's really simple. I'm looking at points where I can define my risk, number one, and have a high probability of success. And I do that by just looking at simply support and resistance. So we're going to take this 1 hour chart and we're going to bring it back. Let's say we'll go to a 4 hour chart, okay? And so we're just going to be focusing on pretty much the last month of price action, which we're going to be looking in here. So you see we have this top where we pretty much were topping out pretty consistently around 17.9. So close to 1800 is where we've been topping out. Price just simply could not get past that. So how do I look at a situation like that? Well, I'm looking at how does price react when we get there. Are we stalling, or are we forming a pattern that is actually something that could push us higher? So are we flagging there, or are we consolidating, looking like we can push higher? So every single time without fail that we touched that 17.9 number, we didn't form any constructive pattern, and we simply just pushed off of it. And so I know that with little risk, I can have a high probability short there. So all I'm doing is I'm looking for shorts at that level. I'm not doing anything else. I'm staying out of the chop. I'm not trying to guess any other trades. I'm not trying to long it or anything like that. I'm simply trying to short at that level. And so while people are just getting whipsawed in this volatility in here, all I'm doing is I'm a sniper is how I analogize it. I'm a sniper. I'm just waiting for that one spot to take that shot. And that is at that 17.9 level. So anytime we get up there, I take that shot. Anytime we get up there, I take that shot, and I'm limiting my risk. So if we break above there, my risk is defined. If we break above there, I'm simply wrong in that trade, and I'm done. So there's no guesswork in my, where do I get out, where do I place my stop? It's really, really defined. And I only take the trade if we're building a pattern that isn't constructive. So if we just go parabolic up to this number like we did in here, we just ramp up there within a matter of a day and a half, and we flush out, that's a trade I want to take. But if we got up there and we just simply flagged and based and it looked like we want to pop higher, then I wouldn't take that trade. So there is discretion involved, as with anything in trading. But this is just a simple reminder that stocks and future contracts and when you name it, whatever you're trading, they stop at certain areas. This isn't random. This is all very, very, very plannable. This is something that you can look for. So let's bring it back down to the hourly chart, right? We'll bring it down to this week's price action. And so you see that we've been in this range. So we're at 16,376 all the way up to 16,717. So you have a large range, and in that range we've been bouncing up and down, and there's a ton of volatility, and it's so easy to get caught up in that volatility and just get chopped around. You could try and take a trade here, you might be getting short here, you might be longing it here, whatever it may be. It's really, really easy to get chopped around because you're trading off purely emotions. But what trading off a chart does is it takes away that emotion, or at least it helps ease some of the emotion. I mean, you're still going to be emotional. That's what we are as humans, but you're looking for a place to, one, base your risk, and you're also looking for a place to where you have a high probability of something going in your favor. So if you come down here and you see this basing action at the same level where we've stopped at the past, that with limited risk you could take a long trade with a higher probability of success than taking a short trade here. So we would go with the long. And same thing with these bounces. It's the thing about support and resistance is never exact. So we didn't just come up here and tap it in reverse, but you get really close. And if price is signaling that it wants to go lower, that a short is a high probability trade. And same thing with this breakdown. So it came down, it tried to bounce off that number, and it just was a weak bounce, and then we faded that area. And so that's where discretion comes into play. And discretion comes from just trading in the markets for a long time. You understand certain patterns, and you understand how to read price action and read order flow and yada yada yada. And all these things added together give you a good discretion in the market. And so nothing in the market is black and white. There's always discretion involved. But what I like about trading like this is it takes a lot of the guesswork out. You're not trading purely off emotions. You know what you need to do, and you're just going to go out there and do it. So when it gets to a certain number, you put your risk on, you take that trade. If it doesn't work out, you just move on to the next and wait for a setup to come. And so, really, this isn't groundbreaking stuff. This isn't anything new. I didn't invent this way of trading. But I just want to remind you guys that even in the most volatile of markets, you can still be rational and you can still make amazing trades. In fact, I prefer to trade in this volatility because you have so much range and you have so much emotion to take advantage of. Because after all, emotion is what fuels these moves, and it's what fuels the market to have these, just insane plays, really. There's so much profit to be left. I mean, there's so much potential profit out here. It's really just incredible. And so if you know how to play this, you'll be rewarded handsomely. And so quick reminder for you guys. One, limit your emotions by looking at points of possible reversals. And so that can be in an area of resistance, that can be an area of support. And also remember that this isn't set in stone. It isn't perfect. Right here, the support zone, it bounces below it and then it pulls above. But you want to, that's where discretion comes into play. You want to see what is price doing. So price actually came down here and created another constructive pattern, and even within here you have another support zone, right? And so it did not break that level, and then you make a higher low, and then you can see we proceeded to go higher from there. So discretion is always essential in your trading, but this will help limit some of that, and this also gives you a place to base your risk off of. So that's probably the most important thing in trading, is defining your risk and sticking to your risk. So what I mean by sticking to your risk is a lot of people will have such an emotional stop, or will have such a emotional point of getting out, that it's really hard for them to take that exit. It can be so difficult to get out because they're using that hope and pray method. But when you're basing your trades off an area where it's very yes or no, like if this completely breaks down with significant volume, let's say you broke this level and I was trying to take a long here, I know I'm wrong really quickly, and there's no point in trying to fight that. I'm simply wrong in that trade, and so what I need to do is just get out. And so it gives you a place to base your risk, and it gives you more of a structured way to know if you're right or wrong. And so I just want you guys to reflect on this. Like I said, nothing groundbreaking, but just over the weekend, review some charts and just look at these things, like where are these stocks or future contracts, where are they stopping, where are they reversing, why are they doing it, and how can I take advantage of that? And how can I not get caught up in the emotions? How can I be that person that is on the sidelines waiting for that trade? Then I take that trade and I do it in a fashion that is very controllable and has a defined risk. And so if you guys can learn to do that, you will be you'll be rewarded handsomely, but that's what being a great trader is about defining your risk, sticking to your risk plan, being disciplined, and trying to control and manage your emotions. So yeah, a little bit of a rant for you guys on a Saturday, but I hope you guys gained something from this video. Again, if you have any questions, send me an email. My email in the description. Make sure you subscribe, like, share this video with anyone that might get some interest out of it or might help them. And this is a crazy market. You guys need to protect yourself, stay safe out there, and remember, trade with controlled emotions and always define your risk. All right, keep killing it, guys.